Hey guys, Toby Mathis here, and today we're going to be talking about what to do if you inherit a property. And I'm going to break this down into the top, see if I can do this, ten issues that show up when you inherit property. If you're inheriting property, usually it's not a good situation. You've lost a parent or loved one, sibling, or somebody has left you a property. And there's a number of complexities that come along with it. And so this is by no means to minimize the the emotional toll, because that is definitely a consideration. Um, but I'm just going to get to cold hard facts of I'm inheriting a property. What the heck is going to happen? So let's talk about a few things. Number one, when you own real estate, I don't care where it is. So if I inherit real estate, I'm also inheriting the upkeep and maintenance on that property. So number one is I'm going to say the first thing you need to be aware of is that there's going to be maintenance costs. And this is going to be repairs, utilities, property taxes, insuring the property. All of those things have to be maintained on that property. You still have to keep it in good working condition. All too often we see properties that are inherited immediately, like they never touch it. Electricity gets turned off, the property falls into disrepair. Siblings sometimes inherit together, and we'll talk about that. That's another issue. But they're fighting over what to do with the property, and then 2 years goes by, and the property starts to look like an eyesore, right? And it lowers that value. So the first thing you want to do is make sure that you understand who are the utility companies, what's the insurance, is it possible to continue with it? There's always things like mortgages and things like that. That's also something we'll be talking about. But there is the absolute cost of maintaining it. And then there's also the property taxes. And the reason I'm going to flag this one as the second issue on its own, as opposed to being as part of number one, is because depending on your state, the property taxes may increase. So it always depends on the use of the property, whether you're going to use it as a primary residence, for example, in California, whether it's under $1 million or over $1 million in that state. But depending on where you're at, you may have a retrigger valuation, or there may be well, that's probably the big one is if you end up having a new property tax as a result of the transfer. And by the way, make sure that you are transferring the property into your name. That's like a huge issue. Is making sure that it's actually transferred to the appropriate name. When somebody passes, the property more than likely is going to be a part of their estate. If it's a living trust, it would be in the trust name. But if it's in a will, you're going through probate to transfer it. Eventually, it's going to get transferred over into somebody's name. In the meantime, it's going to be the estate of, like, so if I pass away, the estate of Toby Mathis. If it's in an LLC, stays in an LLC. That's much easier situation. But not everybody has properties in their LLCs unless it's an investment property. Then you should. But a lot of times, if it's an individual property, it's in the individual name of the decedent. It's going to be in their estate, and you're going to have to get that property transferred into your name, which could involve the court. So just keep that in mind. But property taxes are a big one. Taxes in general may be an issue. And let me explain how this works. There's something called a step up in basis when somebody passes away. So if I pass away and I own my home with my wife, for example, she may get a complete step up in basis on the property, which means the new basis of the property, what you paid for it, for purposes of calculating the tax when you sell. So I bought it for $100,000, I sell it for $200,000, I have $100,000 a gain. A step up says instead of paying $100,000 for it, it's the fair market value when I pass. So it's now $200,000. So if I sell a property for $200,000 and my basis is $200,000, I pay zero tax. I'll repeat that here in a second. What it means is that when somebody passes away, their portion of that property steps up so that the person who inherits may have zero tax when they sell. All too often I talk to people and they say, I'm scared to sell it because of the tax. Chances are there's not going to be a large tax on the sale of inherited real estate because you have a step up in basis. In a separate property state, and you have two spouses, the first spouse passes, their half steps up, the second half, the second spouse passes, their basis steps up. Um, there's a potential there, depending on how that property is held, that there could be a tax. But generally speaking, the basis of the entire property is going to step up when they pass. And so, just one of those considerations that you want to make sure you're talking to an accountant and they do the calculation and they see here is what the actual basis of the property is. If you sell it, here's the actual projected tax. And you want to make sure that you understand that before you decide what to do with the property. Because, again, all too often I have people that come up and they say, in this, by the way, this is all capital assets. So same thing for stocks and everything else. If somebody owns it, they pass away, the basis steps up. When you sell that property, we use the basis of that property when they passed away. There's a potential 6 month later one, but we won't get into that. Just know that when they pass away, that fair market value on that date is the new basis. So if you sell a property in close proximity to somebody passing away, there's a good chance that the tax result will be zero. You should know that. Number 4, co-ownership, because quite often people like to leave multiple parties with heirs, or somebody's, maybe they're a tenant in common and you're inheriting a partial ownership in a property that has another tenant in common, or 2 or 3 or 4 or 10, right? Like there could be a whole bunch of tenants in common on a property, but you may have other people owning it. And this raises all types of issues as far as what to do with the property, whether we sell it. Are you going to end up going to court and partitioning it? I've been involved in those actions where there was a disagreement amongst heirs as to what to do with property. I bought a lot of properties that way over the years as an investor. Quite often you'll end up with, there's 4 kids and they have no idea what they want to do with one of the properties that mom and dad owned, and now they're there and there's a big, they're fighting with each other. They're trying to settle things out over, hey, give me a little bit of money and I'll go away. They're fighting over the value. They're fighting over what the use of the property is. Some people want to live in it. Other people don't. They want to just sell it. The people that want to live in it for free. They don't want to have to pay. They're saying, hey, we all have equal access. All that stuff. There's utilities, there's repairs, there's all those things that come on, and it gets more complex when you have co-ownership issues. So it's really important that you figure out who are the other interested parties, who are the other tenants in common, which could pre-exist. Like there could be tenants in common. Let's say like I own a property with myself and Joe over there. Joe and I are both tenants in common. I pass away. Only my interest goes to my heir. So you got to figure out whether there's a Joe that owns a piece or whether it's just you. And then, how are we going to interact with each other? It just adds a layer of complexity. So that would be co-ownership. Another issue is the location and property type as to whether or not it's something you want to keep. So I'll give you a real life example. In my family, my grandmother lived in Florida and with kin in Alabama, and she had a couple of lots in Alabama that she gave to my father when she passed. The problem is we lived in Washington State at the time, and to probate and handle that property, it was more expensive to deal with that than it was just to disclaim it and give it back to the state. Here, the state, you can have those lots. My grandma thought she was leaving something, to my father, but because of the location, it was so far away, and because it was just lots, so it still had to have money and be developed. It really wasn't. It wasn't something that could generate revenue. He had to let it go because it was too expensive to go through the probate process and to deal with the transfer. Plus, he didn't know what he was going to do with the properties. So, if you inherit property, please be cognizant of the cost of getting to the property. So, for example, if I live in Las Vegas, and if I inherited property in Florida, depending on where it was, first thing I'd be looking at is how expensive is it for me to get to that property? What kind of property is it? Like, is it a vacation property? Is it an investment property? Does it have a property manager? Is there somebody there that can watch over it? Or is this something that's just like a home that I would be using as a second home? calculate that out to determine whether it's something you want to keep. But for sure, those types of things come in, and you need to determine whether or not it's worth it for you to do it. Number six, liabilities that come along with that property. There are certain things that run with the land, like unpaid taxes, there's mortgages. You might have to address these things even during the probate process. More than likely, you're going to have to address them, but you're going to have to address them at some point if there are obligations that are attached to that property. So be looking for anything that's filed against the property. Sometimes you're doing you get an escrow company, they might run it through and determine whether there's anything attached to it, or you get a good attorney and they're going to go look these things up and see whether or not there's any obligations attached to it. And then you're going to want to figure out whether there's any property taxes or other obligations on that property, or if any work was done. Maybe there's some liens that are floating around out there that are unpaid. Those would still attach to the property. And even though you say, hey, but I inherited it, I'm not the one that contracted with them to build a deck. Yeah, you still have to pay them. Rental agreements, if it's an investment property. So you got to take a look and see. You may inherit a property, but you may not be able to occupy it because it's got a lease, right? It may be somebody else has the right to be on that property. You got to determine whether or not you're going to continue forth with that same property manager. If there's a property manager, whether you want to continue to lease it, what are your obligations under that lease? Who is that individual? What is the term? How much are they supposed to be paying? All those things you want to be looking at, and it can sometimes be a little bit of elbow grease that's necessary depending on the situation and whether they're willing to communicate with you even. Number 8, obviously, just goes without saying, is the legal and tax complexity that comes along with owning property. So, for example, you're probably talking to at least an estate attorney. Maybe it's on behalf of the estate. Maybe you're probating. Maybe there's a personal representative you have to deal with as well. Maybe there's a trust company. Maybe there's a trustee if it's held in a living trust. But you're dealing with other professionals. Plus, you have things like taxes that you have to determine. Is there a new valuation or new assessment on the property? Does it reset any of the taxes or cause them to, that the amount can be much greater? Maybe that when somebody owned it, they could only move it up so much, or maybe there was a freeze, and now that they're out, is there all of a sudden a larger tax obligation? You want to look at that. You obviously have capital gains. Think about if you're selling it, even with the step up, you still need to be addressing those issues. You're going to look at those things, but they're there, legal and tax complexities. Financial flexibility, which is a fancy way of saying, hey, real estate's not very liquid. Do you want this asset, or do you want to sell it and take the cash instead? Something you need to be ready to make a decision on and address. Hey, would I be better off not having this property? Do I want to have this in my life, or would I be better off just right now deciding to dump it? You should probably figure that out before you spend a bunch of money on it, or before you spend a bunch of time and energy preparing to take over the property. You might want to look at it and just give a hard look in the mirror. Depending on what I'm using this property for, is it something I want? I'm a real estate investor all over the country, so my answer may be different than yours, right? You may look at it and go, gosh, I just don't want this responsibility. And, maybe it's a $300,000 property. Would I be better off just selling it? Maybe I net on 300,000. You might net, like 270 or something like that, whatever the number is. Maybe, after the fees and the costs of selling and the commissions and things like that, you might just say, I'd rather have the cash, right? Especially if you have debts that could be extinguished with it, or you have a business, or you have some other purpose for those dollars, pay off your credit cards, things like that. You got to do the math on it. The old joke used to say in financial planning is only 3 rules, and that's calculate, calculate, calculate. It's you just get your pencil out and say, hey, do I really want this? Is this something I need? Or would I be better off financially? Making sure that you're looking at it, because that's just dollars and cents. And quite often it can be a stark difference, especially if you have credit cards at 15%. There's no way that property is probably kicking you 15% annually. I mean, maybe depending on if they bought a good investment property, but it's probably unlikely that that's the case. And the last one is the non-logical stuff. It's the more the emotional. Do I, is this something that I grew up with? Do I have memories attached to this property? This comes up all the time when there's siblings. I've seen it repeatedly. It might be the family cabin, and there's three siblings. Two want to sell, and one wants to buy, and they end up fighting with that. I actually have a client that ended up with the home that his mother was in, and they fought for quite a while with their siblings. The siblings didn't want anybody to have it; they wanted to sell it. But at the end of the day, he came to the table and was able to raise the funds and ended up buying the property, taking it in lieu of other, inheritance and coming up with the cash to actually buy it. That may be something that you need to have a hard inner reflection. Is this something that's very important to me, that I'm going to feel bad in 2 or 3 years or 10 years that I let go? Is there an emotional attachment that maybe doesn't make dollars and cents? In other words, the accountant comes up and says this, this, this. The attorney comes up, says this, this, and this. And then you say, even though there are plenty of reasons not to take this property, here's the big one for me: is it's a heart issue. This is something that I have an emotional attachment to. I want this to remain in my family, at which time then you need to make sure that you're being vocal and you're honoring that part of yourself, even if it doesn't make economic sense, right? Again, I joke about the calculate. There's no way to calculate the emotional. You have to decide whether it's something that you really want to have, and that's only you can make that decision. You can seek input of others, but at the end of the day, you got to be true to yourself and say, is it worth it for me? Am I in a financial situation where I am able to take care of this property? I use the simple rule of it's about 5% of the property value per year is what it's going to cost to repair, maintain, pay for a property, right? So if I need to maintain and keep that property going, replace the roof, replace ACs or whatever, keep it working, pay the property tax, pay the insurance, maintain that thing, repair everything that's broken, it's going to be somewhere in that 5% range. That's the easiest way to use that. Hey, that's the burden of maintaining a property. Some of you guys are going to say it's not that high. Well, sometimes there's a debt equivalent or the lost value of those funds that you're looking at. So I always look at it and say it's roughly about 5% a year that it's really costing me, because I could have been making money doing something else with those funds. Opportunity costs when you do it, but it's about 5%. So you're just looking at it, make sure you're doing your calculations correctly to determine whether or not it's something that you can hang on to. And then maybe I'm making an emotional decision. Hey, this was the house that I grew up in, or this is a house that I visited a lot, or this was really important to my family, and I know that my dad wanted it to go to his grandkids or whatever, or my parents wanted it to go here, or this was really important to my mom and she wanted my sisters and I to have it. Whatever the case, that's for you to decide, and that's something that only you can decide. So it's something you get together. So those are the 10 considerations. I know I threw a lot at you in a short period of time, but it helps just to kind of list them out and kind of look at it and say, here's the things I should be thinking of, and just go through each one. Maybe you're doing it with a professional. Maybe you're doing it with the other folks that may be inheriting with you. Maybe you're doing it with a trusted advisor. Maybe you're doing it with somebody that you trust just in general, and you want to bounce it off them. This is a framework that you could use and say, here's the issues. Is there anything hidden here? What are the costs? Or, what are the property taxes? What is the insurance costs? What are the utilities? Are there any debts associated with this? Was there a mortgage on this thing? What do I have to do about it? Do I have to worry about it being called in? Typically, probably not. Maybe so on others, right? So you got to be looking at it and determining, like if you're married and you inherit, it's not an issue. But if you're inheriting as a child, there might be an issue. I need to look at these things and determine whether or not, after considering everything, this is a property I want to maintain, can continue on with, or maybe I want to buy other heirs out, or do I want to just dump it? Those are the considerations when you're coming through. So there's about 10 of them. Just give them a hard, honest look and decide based off, after going through that analysis and checking each box, whether it makes sense. Hopefully I give you a good framework so that you're not missing anything. And it's a pretty good comprehensive list, but there's always the unexpected, but it gives you something to start with. And if you did inherit property, congratulations. And also I hope it goes well for you. It's quite an honor for someone to actually say, this is where I want it to go. So if you're a recipient, consider the source of who gave it to you and what they would want as well. That obviously goes in that 10th category, the emotional. But don't just rely on that one. Look at all of the economics and the reality when making your decision. If you know anybody that could benefit from this, please share it with them. And if nothing else, good luck and God bless you guys.